Let's get a read on this day, this moment, with economist Brian Wesbury and the Washington Free Beacon's Liz Harrington. Liz, on this notion that the markets are still convinced that they can get a deal or see a deal, and it might be late, but it won't be never. Hope springs eternal for this bunch, but are they getting ahead of themselves?
No, I don't think so, because if we remember what happened with the House Republicans, everyone said that the health care legislation was dead the first time they did not get enough votes to pass it. 6 weeks later, they got together, they passed their version of the bill, and I think something similar will happen in the Senate. But this idea that President Trump endorsed earlier today, that because the Senate is trickier, because you can't lose, you have very few votes that you can lose to get something done. If they can't do that on health care and what Senator Ben Sasse has suggested and Trump endorsed, just doing a straight repeal, I think, is a good strategy, because it will finally force the Senate Republicans to do something on health care, which they've won so many elections promising to repeal Obamacare. They need to do it, and if they don't get enough votes, if they just do a straight repeal, that will finally force them, hopefully, to enact some of their health care reforms they've been running on for so many years.
You know, Brian, when you look at the big economy, the big picture here, does it make a difference in your strategy if we get a deal on this, if it's delayed, if tax cuts come in 2018 rather than 2017? Any of that factor in?
You know, Neil, it does, but let me kind of describe two worlds, at least the way I look at it. One is, if you look back at the last 8 years, in spite of higher taxes, in spite of Obamacare, the market, it's up well over 200% from the bottom in 2009. And I think that's a testament to the power of entrepreneurship, the power of our companies and new inventions. It's amazing. Corporate profits in the first quarter of 2017 were up 14% over a year ago. And guess what? The S&P 500 is up 15%. And that's in a 2% growth economy. If we want to grow faster than 2%, we have to get these things done. Tax cuts, true regulatory repeal, reform of Obamacare. And if we do that and accelerate the economy, I think things get better. Economic growth grows faster, earnings grow faster, and the stock market can go up more. But it doesn't mean that the stock market can't go up if they don't happen right away. So I'm sure hoping that we get those things done, but I'm optimistic.
All right, I want to bring Charlie Gasparino into this, guys. And Charlie, you're hearing reports of frustration among some Republicans on this whole health care tentative step forward, then a step back, that some just want to move on to other stuff.
Yeah, and it's obvious that the president is starting to listen, and this seems like the logical way of doing it. Healthcare is a morass. You know, it's going to be very hard to repeal and replace. You know, remember, President Obama didn't create the Rube Goldberg, sort of contraption that is health insurance, the health insurance market right now.
Very smartly put together.
Right. It was put together over a year.
Right.
You're not going to reduce this and, just basically, replace it in 200 days. So what they're saying, and they've been pushing the White House, is go to tax cuts fast. And it looks like they're doing that by saying, we repeal, we'll replace later, do some marginal stuff. It's going to take some time.
But weren't they going to use the healthcare thing as sort of a baseline on taxes anyway? And without that, it could be complicated.
It could be complicated. Listen,
I can't see Paul Ryan going along with it.
I'm not a budget guy. I'm not Mick Mulvaney. But my guess is that the Republicans know right now, and Paul Ryan knows right now, that they have to get a tax cut to get what Brian said is 3% growth. We should point out, I mean, Brian made a really good point, and I keep telling you about this, about the stock market. There's a lot of reasons why the stock market, even without the tax cut, might not implode. Less stocks than there were 15 years ago. No offense, interest rates are really low. Corporate earnings are okay. That's kind of like the basis. But how do you get the economy growing at 3%, where you can start repaying the budget deficit down, where you start running surpluses instead of deficit? And how do you get the stock market to break out of where it is now and possibly go up further in the future? I mean, obviously, there's going to be some fallbacks. The only way to do that is to get some sort of fiscal stimulus. And what the market is dying for and begging for is a corporate tax cut that says 20 on it. 20%,
Right.
Not 25%.
something like that. I think if it says 20, they'd be happy.
Yeah, well, it'll be
22,
substantially lower than
28.
where it is
Yeah.
now. You know, Liz, one of the things that came up, and I don't think, and this is where I'll partly disagree with Charlie, is that I do think the markets hang on everything that's going on and the prospect of tax cuts. And there's proof of that yesterday when this tweet storm first started over two MSNBC hosts having a battle with the president. Then the market started tanking. I'm not saying exclusively over that, but I saw it in my own naive way as yet another distraction the markets didn't welcome from an agenda they do welcome. What do you think?
Right. Well, I think the market certainly reacts to everything, but I think this is one of those stories.
So you agree with
that
me and think Charlie's a fool? Is that seems to be what you're saying?
I won't go that far. But look, I mean, this is the type of story that's going to go away, especially by next week's the 4th of July, and nobody's going to be talking about this. But they will still be talking about health care, and they will still be talking about tax reform, which I think healthcare, you have to get rid of the Obamacare taxes before you do tax reform.
Well, now they're talking about not even doing that. One idea, the middle ground way, is to keep the surtax on rich people,
I think that's something the Republicans cannot compromise on.
Why can't you take the corporate? Why do you need to reform? Why do you need to reform health care? I mean, Brian might know the answer to this. Before you cut the corporate tax rate down to a level that's sort of in line with the rest of the world. I mean, I can understand putting off maybe other tax cuts, but the market. Listen, I'm not some rich fat cat. I just know that we need businesses to hire. Kind of, but anyway. We need businesses to start hiring. I like the market going up because believe it or not, middle class people have money in pensions. The corporate tax cut seems to be the logical place to start. Why do you need to reform health care?
Brian?
Yeah, Charlie's absolutely right on this. The individual side is made more complicated by Obamacare, but not the corporate side. You can do the corporate side without the health care component. Yeah. And one of the great things about the corporate tax cut is that it pays for itself because you will immediately get capital gains. Once you increase after-tax corporate profits, the stock market goes up, you get capital gains.
What if that's all you get, Brian? What if that's all you get? And I always wonder, like, you cut your losses and you sort of go for what you can get, and the corporate thing seems to be something which is broader agreement to Charlie's point than on a lot of this other thing. So you get that, and maybe that's all you get this year. I mean, you don't get the health care stuff. You don't get any of that. You just get that, the corporate relief.
It's kind of like souping up a car, right? If you put a turbocharger on it, if you put a bigger fuel injector, if you put the special gasoline in it, every one of those things makes it go faster. So each one of these pieces will help. If you just get corporate tax rates, I'll say we'll get 2.6, 2.7% growth, but that's still better than 2%. So they need to start getting some of these improvements.
So what would, to that point, Liz, then if that's all, and you talk to a lot of these folks on both sides, if that's what we're left with, just the sort of corporate relief, and they'll tackle personal rates, they'll tackle repeal and replace, I guess, next year if they can, then what? What will the fallout be?
That's absolutely a good idea, but I think this idea that the Republicans in Congress can't work on both things at once is pretty absurd. I mean, do everything that they get.
They've proven it.
But I mean,
I agree with you, but they've proven it.
Right, but the other problem with the health care, getting that taxes under control, is that Obamacare had so many taxes in it that had nothing to do with health care. I mean, and now you have moderate Republicans in the Senate saying that we're not going to get rid of this tax on an investment tax on the rich because they're scared about Medicaid funding in 2035.
I'm sorry, to your point, they also know that money went to a lot of other means and a lot of other initiatives. Let's just say it was not in a lockbox for just this sort of thing.
But why even get into that morass, like, immediately? Listen, we know that Obamacare is horrible. We know that it's packed with taxes and a bizarre way to allocate insurance to people. We know that. It's not going to be undone in a day. We also know that U.S. companies are taxed at a much higher rate than the rest of the world. We also know that U.S. companies hire people, and when you hire people, guess what? A lot of times they get health care. Why don't, I mean, this is low-hanging fruit. You cut the corporate tax rate, and you get, if you get GDP to 2.7%, guess what President Trump says next year? Screw the Russian probes.
And by the way, the gain that we've seen in healthcare coverage, because a lot of people who swear by Obamacare talk about the increase in coverage. A lot of it has nothing to do with Obamacare. It's just people who got jobs and got it through the employer.
Absolutely.
But
right, exactly.
Guys, I want to thank you all very, very much.